there is a real possibility that we could see silver fall a couple of percentage points down to $23 an ounce. And once it gets there, who knows how much further it could drop. We'll talk about that and so much more as we explore. It's times like these where many people accuse me of being down on silver. But the reality is I like to be realistic about silver's prices. But one thing is for sure, I think when you are realistic about silver and try to tell the truth about silver as far as you know, as far as I know it, then really that's showing my true love for the metal, because I believe the metal sells itself. In the long run, I am bullish on silver. And what does it mean for me to be bullish on silver? Well, it means that I am realistic about its price performance, and that is as a wealth preservation device. It is a metal that has proven itself time and time again over the long course of time to be able to maintain its value, really no matter what the price is. So that is my angle here when we're talking about the price movement. And of course, a lot of this is based off of what happened last week, which was silver's worst performing week in the entire year. Now, I'm going to be referencing an article here from Investing Cube that talks a little bit about the price action and what they see could happen in the coming weeks and days here. And I'm talking about potentially within the next couple of years, we very well could see silver fall to numbers that we have not seen since before the pandemic. Yes, that's a real reality we must contend with here, even in this quite volatile time of economic uncertainty. And I'll explain why that could be the case. And I'm going to give you the other side as well, too, and why I'm still sticking with my prediction for the end of the year. We'll get to that in a moment. But if you enjoy videos like this where I talk about the markets and the fundamentals, hope you will consider pressing that thumbs up button down below. It does help the algorithm, and maybe share this video with others if you haven't done so already as well. I hope you will consider subscribing to the channel. So, silver price tanked hard last week. Yeah, this is definitely a good description of what happened. That's after it had a major upthrust. The negative price action occurred after rejection from the $25.40 level range all the way up to the $26.80 supply zone, which was repeatedly mentioned previously on that platform. Silver price per ounce had its biggest losing week of the year. And we also saw recently a little bit of recovery, and I'll get to that in a moment too, that we saw here today, but it wasn't really by much. In fact, as I record this video moments before the markets close, silver is only up 11 cents, almost a half a percentage point to comfortably, though, above $24, at least for now. And gold also climbed, although not as much. It climbed $5.10. So silver is the latest drop in commodities prices and is being accompanied by copper and zinc in its negative price action. There are multiple factors behind this drop in silver price per ounce, but the biggest of them all is the slower than expected recovery in China, which means that there's not as much demand for silver. I've covered that in my video and actually received some flack from folks stating that no, it wasn't that, it's all manipulation, which, you know, I do reject that notion. I'm open-minded to the possibility that there's some manipulation going on. In fact, that term really is a very broad term when you look into the paper exchanges and the like, because there's so many derivatives in the market. So in the loosest definition of the term, heck yeah, it's manipulation. But natural market forces play a large role here, and there's a lot of psychology in the markets. And yes, it very well could have been an overreaction. In fact, once that data are analyzed to its fullest, we may see silver recover, but we are really seeing more and more signs of a recession ahead. And I may talk more about that in another video, but that works against this metal. Because why? This metal especially in these kind of bars here. Think of this as an industrial bar, and these industrial bars of silver are used and refined to be used in electronic devices, most of which depend on a strong, healthy economy, where there's healthy demand for devices and chips that have silver in them. And the data out of China, the news out of China last week was the exact opposite of that, which is putting a hurting on demand for silver, especially what the Silver Institute has projected for this year. This is all new information, just came to us last week after a pretty big bull run that we saw for silver. It seemed like there was no stopping it. But alas, here comes industrial demand, which has been the bane of silver's price existence for quite a number of years. And especially when we consider that really for the amount of silver out there, there really is no shortage of actual silver supply, other than the deficits that have been projected by the Silver Institute and what we kind of saw last year with it, but not enough to really have that much effect on price action moving up dramatically, other than kind of what we had seen before last week. And so the latest economic data shows that the second largest economy, China, is still far from being fully recovered after the lockdown. This led to demand concerns for industrial metals like silver, copper, and zinc, due to which they experienced sharp sell-offs. A strong bounce in the dollar index further intensified the selling pressure. And remember, folks, the dollar index, this cotton fiber note here that's known as the debt instrument, this thing here is going to put a hurting on precious metals as long as it's strong compared to other currencies out there. Now, keep in mind that silver in other countries and other currencies is higher, and so is gold. And gold, heck, even in U.S. dollars, it's much higher. Gold is not taking the hit that silver is in this case, even with a slight bounce back today. Considering that bounce back that we're seeing in today's gold and silver prices, I'm referencing now an article from Kitco that talks about this. They're modestly higher in quieter midday U.S. dealings, and even into the later part of the day, traders are awaiting fresh fundamental inputs as a busy data week lies ahead, including negotiations aimed at keeping the U.S. government from defaulting on its debt obligations. And focus this week is on the U.S. debt limit extension talks between the White House and Congress. Reports said congressional leaders and President Biden will likely meet Tuesday. This is after a meeting that was postponed by the White House on Friday. The U.S. government could run out of money as soon as June 1st for some aspects of the economy. U.S. Treasury Secretary Janet Yellen said over the weekend that progress is being made between Democrats and Republicans in order to avoid a financially catastrophic U.S. government default in its debt obligations. Global stock markets were mixed overnight on some of this news. So that's kind of where that is. And now, how does this relate to what's going on with silver and why it could drop yet another 4.5%, possibly even more? Well, it's based off of technical analysis. Very rarely do I get into technical analysis, but I found this quite fascinating from this piece at Investing Cube. A technical analysis of the silver chart suggests that an ongoing correction may go much deeper if bulls don't step in soon. A weekly closure below the $24.60 resistance and the trend line are the signs of a bearish reversal along the formation of a double top pattern. In the coming days, the silver price prediction of $23 appears to be quite valid, according to this report, considering the momentum behind the ongoing downward push. This price target aligns with the 0.5 Fibonacci retracement level, which is the 4.4% below the current price. The only way to avoid this outlook is to gain strength above $24.60. On a higher time frame, silver and gold seem to be set for massive growth in 2023. So they are bullish. And by the way, so am I for both gold and silver heading into the rest of this year. Let me repeat that for those of you who think that I'm being down on silver. I am still sticking with my price target of $28 an ounce for silver. which is a tall order considering I got nowhere near that when I made more bullish predictions the 2 previous years and have been wrong. So, you know, the thing is, I'm still making these predictions, and they're relatively bold considering silver's performance over the last couple of years. But notwithstanding, you know, I am hopeful for silver, but I think we might see it get hit, you know, in the beginnings of a confirmed recession if it comes. Many people feel that we are in a recession right now, even though the numbers don't bear it out at this very moment in time. And that being said, and especially with the news we're getting from China, unless it's revitalized or revised, those numbers revised, then we're going to likely see silver fall. And it very well could fall to that $20 support that many people thought we might not see again this year. But it's quite possible that we could see it. And at that time, well, we have to readjust and reconfigure and be agile with how we handle the situation. What does this mean? This means that it provides a buying opportunity. What does that buying opportunity look like? It's all about the premiums, folks. You got to keep in mind what the premiums are and base your decisions on what you should stack. Certainly it's not going to be Eagles, given the Mint's history there of producing enough Eagles to meet demand. You can chalk those off your list. It's likely going to be privately issued bullion rounds and or 10-ounce bars or even kilo-sized bars that are recognizable brand names at the lowest premium possible. And that is the kind of silver that you should be stacking in times like this. And lowest premium possible means doing your due diligence and research among a variety of bullion dealers to find the best price possible. And there's other factors you have to weigh in when you make a purchase from a bullion dealer, but that's a subject for another video as well too. You want to find a legitimate one when it boils down to it, and that's really the bottom line in terms of pure silver stacking. And so depending on how you handle it. So do not give up hope. Do not be discouraged. We've been here before. We've seen this type of action before. Yes, we were surprised. I was surprised at last Friday's move, a dramatic move, and Thursday too. I mean, you think about it, it was 6% over the course of the entire week. That's a pretty big drop for 1 week. Silver got crushed. There's no two ways about it. But it does not mean that silver is not valid in what it has done and what it has shown to be over the course of the history of the United States, number one, and the history of the world, number two. That historic value is intrinsic value, and that is something that stands the test of time. It's a matter of whether you will stand the test of time with the silver that you have in your possession. All the silver here, I'm holding on to. Some of it I bought a long time ago when silver was a lot cheaper. Like, for instance, this Silver Eagle dated 2020. I bought when silver was a whole heck of a lot cheaper, and I'm holding on to it. If I was to sell this now, I could probably get you know, at least $4 or $5 over spot, maybe even more. There was a time when Silver Eagles were selling at bullion dealers online at $10 and $11 over spot. So you never know what the market's going to bring. But nonetheless, be prepared for $23 silver. It very well could come. It may not come, but be prepared for it anyway. Be prepared for these kind of price actions and price moves. So I hope you found this video insightful, encouraging, educational, and I would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.